If you love gold, I'll give you 168 million reasons why you're going to love this interview with LaFleur Minerals. With gold trading above $4,000 US per ounce, reaching new all-time highs just in the last 24 hours, investors are turning to small cap gold companies that can rapidly transition from exploration to production and cash in on those sky high prices. LaFleur Minerals is a small cap company, quote, building Quebec's next near term gold producer, advancing towards a target of 30,000 ounces of annual gold production. Do the math in US dollars, that's $120 million. In Canadian dollars, that's $168 million potential per year. We're not saying it's on the table, but that looks very promising. And that's all thanks to the restart of their fully permitted Beacon Gold Mill. We'll talk about that because a lot of you are new to gold and you don't know what that means. We're going to get to that. And that's all going to be fed from the company's 100% owned Swanson Gold Deposit. That deposit has a 43-101 resource of 123,000 ounces indicated, another 64,500 ounces inferred, and it's approximately 50 kilometers away from the Beacon Mill in Quebec's world-class Abitibi gold project. Cal Mal, he is the chairman of the company, and he said this: LaFleur isn't just exploring, we're building Quebec's next gold producer with a fully permitted mill, nearby feed, and record high gold prices. Our focus on generating early cash flow while expanding responsibly across the Abitibi. Cal, welcome to Agoracom, my friend.
Thank you, George. Nice to connect with you again.
Yeah, great to have you. Look, people are going to find out during this interview, but you've got a long track record of success, and LaFleur looks like potentially another great one. Your quote, let's start off with that. Big picture. We're not going to go into the details just yet. It's pretty bold. How confident are you that you're going to, in fact, become Quebec's next gold producer?
George, we are going to be the next gold producer. Our mill last operated 2 years ago when gold was 1,600. We're restarting that same mill with gold at 4,000 an ounce. And the economics are obvious and speak for themselves very simply. The mill is ready to restart, and the price of gold is where we want it to be, and it might even be going higher.
You're in the unique position, and you don't see this much in the small cap world, of controlling both the resource and the processing facility. So, how rare is that? And how, in the small cap world, anyways, not in the big cap world, but in the small cap, and how big an advantage is that to LaFleur in achieving what it needs to achieve?
I think, George, with the price of gold, the mining model for junior exploration companies has changed. Before, the junior company's mandate was to go find a resource and then wait for a major to come and put them into production. And the economics have changed. Now, even a small deposit going into production at 4,000 an ounce is economically very feasible. But to do that, you need a mill. So although there's a lot of gold companies with ounces in the ground, very few have a mill that can turn those ounces into dollars. And we're a full-fledged three-pronged gold company. We have our own mill, we have our tailings pond next to the mill, and we have a nearby deposit that's on a mining lease, which makes it very easy to start mining from.
Well, let's talk. There are going to be a lot of new investors. Look, gold's over $4,000 an ounce, Cal, and a lot of new investors starting to come into the space. A lot of them understand the deposit that's got 123,000 ounces indicated, 64,500 inferred, and could be growing. A lot of people don't understand, though. They're going to hear for the first time the importance of having a mill. So, in layman's terms, give us a little education for everyone at home. How important is it that you have that mill?
Again, George, with gold at 4,000, everybody wants to start producing and you need a mill. But anywhere in the world, and especially in Val-d'Or, to build a mill, not only do you need the dollars, our mill itself is valued at $50 million in the asset, but the longer term is the 3 to 4 year period for permitting it. And if we were to permit a new mill, just the permitting alone would be 30 million in 3 to 4 years. So with gold at 4,000 and the urgency to produce, we've got an amazing asset in a mill in the heart of the Abitibi Gold Belt.
So that's a huge advantage because you don't have to wait those 3, 4 years. You're ready to go with it.
Yeah, we're as ready as you can be, George. I mean, I think we'll be going early in 2026 and producing ounces of gold.
When okay, if everything, I love that you said that. I was going to ask you this a little. I was going to ask you this a little bit later, but since you've said that here, give us an idea of timeline, because your statement is confident, very bold. Quebec's that next gold producer. You're going to have to go through a couple of steps to get there first. So an overview of the steps and ballpark timelines on that. And we're not going to hold you specific dates, but that way everyone at home can have a really good idea of the cadence of what you guys are going to be going through.
George, again, our mill is pretty well ready to restart. We've already started the process to replace some of the parts and equipment at the mill. Our Swanson deposit sits on a mining lease, and a mining lease requires very little permitting, which we've got started. So our immediate goal is in December, we want to aim to start doing some trial runs at the mill. We've got some ore from when it last operated, so we'll start some initial trial runs in December. Our goal is to be fully operating with gold production in late January to February of 2026.
So do you think you're going to be on track in 2026 to do 30,000 ounces, or do you got to build up to that because you're going to need a little bit of time to build up to that?
I believe we can achieve that goal in 2026, George, not only from our own Swanson deposit, but there's deposits around us and the companies have approached us about milling their ore as well. So we believe that 30,000 is a very achievable goal for 2026.
But if you did 30,000 from your Swanson, that's all the money going towards you, in layman terms speaking, right, Cal? As opposed to when you're bringing in from George Gold and others, you're making money on that. But those 30,000 ounces, how much of those do you think will come out of Swanson itself or from Swanson?
It will be all from Swanson, George, but the other aspect we have available to us with the mill in hand is we can acquire ounces that are near us from other companies through M&A. We don't want to be a toll milling company. We want to be a full-fledged gold company and
Right.
own our own ounces. And if you were to look at the project's map and the ounces that surround us, the opportunity to acquire those in an M&A transaction are very phenomenal. And we're targeting that as well, to acquire ounces from near the mill and be owning those ounces in one manner or another, not toll milling.
So is it safe to assume that you'll be closing a couple deals in 2026? How confident are you of some M&A taking place?
George, the price 4,000 gold has made M&A in Val-d'Or in the Abitibi belt the next compelling transaction that has to happen. And I believe you'll see some M&A transactions happen with the bigger gold producers, as well as some of the smaller ones like ourselves in the Val-d'Or district in the coming months, or especially early 2026. I believe there'll be a number of transactions that have already
Wow.
kind of rumored to be started already.
I put during the intro, I just did some basic math. I did 30,000 ounces of gold, multiplied that by $4,000 an ounce, and then added the Forex, the Canadian exchange rate on to come up with a number of 168 million. That's a lot of people do that. I'm going to I want to make sure everyone at home knows I'm not projecting that or predicting that, but we all do back of the napkin math. How how accurate is my math? How likely is that math?
No, again, that math, I mean, it's factual. It's based on numbers that are real now. And, it is dependent on the price of gold staying here. But I'm
Uh-huh.
confident the price will stay here, maybe even go higher in the coming months. But again, there is that risk the price of gold could go down. But, even at 4,000, there's lots of room for us in the economic model. As I said, the mill last operated at 1,600 gold, and it was marginally economic at 16, so you can imagine at 4,000.
Cal, let's talk about that for a second. Because and this will dovetail into talking about your team. But before we talk about your team, how were you able to acquire all this between Swanson and the mill? How are you guys able to put this together? Because this seems like the steal of the century in hindsight.
George, two and a half years ago, the mining market was absolutely dead. Nobody was getting funded, but people weren't answering phones. And Monarch went into a situation where they had a lot of debt, and their mill was marginal at 1600, and they couldn't refinance the debt. They went into bankruptcy. And at that time, there was not much money for mining on the table. And we were fortunate that, between myself, our Bull Run Capital, and our investment issuer, Colored Ties, we were able to qualify to make a bid in that bankruptcy for the Monarch assets.
Wow.
So we made the bid and we won half of the assets. Probe Gold won half of the assets. And the assets we got were this mill, which had been upgraded for $20 million in 2022, and the Swanson deposit, which at the time, at 1600 gold was an okay acquisition, but in hindsight, at 4,000 gold, like you say, it's like winning the lottery for us.
And I remember Monarch. Great company, great management. They built it all up. They just didn't get the gold price on their side. It's almost unfortunate that they couldn't happen for them. But here you are. Let's talk about your team, because you make it sound easy, but buying this isn't like going to Costco and I'll pick up that deposit and I'll pick up that mill there. You got to have some really smart people around who either know they're available, can value them properly so you don't overpay for them, and at the same time can kind of have the vision of the future of future economics in order to say this is a good buy now because later on we think it's going to be a fantastic buy. Talk to me about your team, Cal, because when it comes to gold, there are a lot of companies, there are a lot of industries that you can run with a bunch of smart people, but when it comes to gold mining and things like this, you've got to have people who know what they're doing. Otherwise, you can lose everything. And you've got a great team, obviously, because you were able to pick up these incredible assets. Let's talk about them.
Yeah, George, in terms of when we did acquire the assets, obviously they're located in Val d'Or, Quebec, very French-speaking town. We wanted to be a good corporate citizen and to speak to the French culture. So the name LaFleur Minerals was chosen for that factor. From my generation, Guy Lafleur was the best hockey player around,
Ah,
and LaFleur speaks to Quebec. So we named the company LaFleur Minerals, and
great name. Great
and
name.
when we want to be very good citizens in Quebec, and we are, our mill is located 20 minutes outside of Val d'Or. And then we were fortunate, and this happened after we named Lafleur, not before. Jean Lafleur is a very prominent mining advisor in Quebec. So after we named this Lafleur Minerals, Jean Lafleur and I connected, and he's decided to come on as an advisor to us. We have the old mill superintendent, Guillaume, is operating our mill. He's been taking care of the mill, and he's very well respected in Val d'Or. We have Paul Tenieri, who used to actually work at the TSX exchange to vet listing properties. He's our CEO. He's a very qualified geologist. We were also able to retain Louis Martin, who was the geologist for Monarch all these years. He knows the projects very intimately.
Yeah.
So in terms of having a team, I think we were able to keep a lot of the Monarch team, but we've added John Lafleur, Paul Tenieri, and on the corporate side, we have a full corporate team with Macmillan as our law office, and a corporate CFO, corporate secretary that we share amongst some of our other deals.
I want to make sure we're not guilty of making this sound too easy or too good to be true, because every company, I don't care if you're Google, I don't care if you're Nvidia, every company has its challenges and every company has risk it has to manage. And I'm not talking about everybody has execution risk. So I don't include that because everybody's got that. Devil's advocate. What are some of the things that not necessarily keep you up at night, but you got to stay on top of, you're cautious of, and you got to make sure it don't end up biting you in the rear end someday. What are the kind of things you're concerned about with LaFleur, and that investors should be aware that you're managing?
And I think what's happened is Val d'Or is a very strong mining town, but with the surge in price of gold, Val d'Or is also a very gold-rich belt. And sourcing contractors and trucking companies, is going to be a competitive situation, and we've started that ball rolling so that we're ahead of the curve. But in terms of some of the other risks, I mean, there's always the operational risk of, having issues with the equipment and what have you. But again, we're smart to that. We're planning well ahead. And I think the price of 4,000 gives us a lot of room for error. And this deal does look too good to be true, but sometimes you need to get lucky, and we did get lucky in that
Yeah.
the price of gold is where it is, and that gives us a lot of room for error. And we believe we're working very smartly, strategically, and planning 3 months ahead rather than at the time when things need to be done.
Well, smart people tend to make their own luck. So yeah, I'm sure there's some luck involved, but you got a smart group of people that really, really made that luck. And I'll tell you one thing is your timing that's impeccable. If I could talk about that, because I know of management teams who picked up really promising, really great projects, but they picked them up 10 years ago, and they've had to go through 10 years of pain and waiting, and the price of gold not responding, and investors, like you said earlier, not even caring about gold because we had blockchain and crypto and even cannabis and all those that took all the attention away. How long you've only been sitting on this for 2 3 years, right? So you haven't had to, you guys smartly, your timing was incredible. Let's talk about that for a second.
George, I think one of the assets we have is 2 years ago, like I said, there wasn't money available for junior miners to raise. The benefit we had was Bull Run Capital is well funded from, we've had success in past deals. We also, I'm the CEO on Colored Ties Capital, which has some assets. So we were able to gather our own capital at a time when there was no capital for the junior mining market and acquire assets in that bankruptcy. So that was our competitive bonus, was the ability to put our own capital to work. And luckily the market's come around, and we've actually just started going to the market. We've almost self-funded this deal until now. And as you know, now the market is flush with cash, and we're getting offers for funding from almost 4 or 5 different sources of capital, whether that's offtakes, royalties, or debt on the mill.
Let's talk about that. Is there a certain amount of cash that you're going to need to raise in order to make this happen? Because I know you're going to need cash when you want to expand, when you want to really increase the capacity of the mill, for example. But right now, with your goal of 30,000 ounces per year, how much more cash are you going to need in order to make all that a reality?
George, we just closed 3.2 million about 3 weeks ago at 48 cents per share. We are also on the verge of closing a flow-through financing any day now at 69 cents a share, and that'll be about 2 million. So that gives us enough money to work our projects. We do need about 4 million for upgrading the mill parts. And like I said, we have offers on the table from either gold notes or offtake or royalties. And the nice part is when we acquired these assets in bankruptcy, they had royalties on them, but the bankruptcy wiped out the royalties. So our mill is 100% owned. There's no royalty. There's no debt on it. And
Unbelievable.
having that asset debt free, and not only is it debt free, George, it came with a $2.4 million bond that Monarch had put on it. That's still in place. So you couldn't get a better situation than a fully permitted upgraded mill that's debt free, that's encumbrance free. There's no royalties or anything on it. So
Well, I hope you guys are going to send the Monarch guys a nice Christmas gift or something like that, a really, really nice basket. Just because I almost feel for them a little bit. But again, your team, this is the way capitalism works. Let's talk. We got a few minutes left. Let's talk about this. You've got some growth plans to go beyond 30,000 ounces per year. Give everyone a sense of what kind of growth plans you're thinking of. And again, I want to be careful for everyone at home that that those plans aren't is set in motion just yet. But what kind of growth plans are you looking at?
George, our business model is to start producing with our mill, which is about 900 tons per day now, and prove that the mill operates efficiently. At the same time, we're looking to acquire ounces, as I said, around the mill. We want to build 3 to 5 million ounces around the mill through M&A, and then upgrade the mill to be 5,000 tons per day. And the beautiful part is the mill's already there, the infrastructure is there. The permitting to upgrade will be minimal compared to having to build a new mill. And we believe if we can upgrade this to 5,000 tons per day, it will require 25 to $30 million capital raise, but I think that's going to be available. And our goal for now is to prove that we can operate the mill efficiently and then upgrade it and acquire ounces and then be a producer of 150 to 200,000 ounces per year in the next 2 to 3 years. That's our vision for the company going forward.
Well, I mean, it remains to be seen, obviously, but I think it's also fair to say that you've already shown that you guys have a vision and you can execute on that just by bringing the company where it is today. So if that's your vision, I think people got to take that seriously and really watch and really watch for that. And that brings me to my last question when it comes to vision. Little bit about you because I know you've talked about your team, but you've got a track record of great success in the small cap world, and that's important because that attracts the right people. It attracts the right kind of capital because you got that success record. Let's talk a little bit about you and Bull Run Capital and the success you've had in the capital markets because I think investors need to know that because you are the executive chairman of the company, and I think that's a really important part of all this.
George, myself, before I became fully involved 100% in the capital markets, I was with the RCMP as a police officer for 12 years. And the first deal that I did in the capital markets was a potash deal that started in Regina, where I went for my initial training. We acquired assets in Regina for potash. We raised 50 million on the deal, and that
You and I worked on that one together.
yeah. Potash prices fell and we were left with 40 million and Africa Oil took us over for our cash. And as you know, Africa Oil was the Lundin family. They hit it big in Africa and that stock ran to $18, $20. And that's where I really got my footing in the capital markets. Since then, I've been in charge of managing that capital and I'm up every morning at 5 o'clock to see where the market's coming, where the market's going to. And we've been able to put together deals that appeal to the market on that basis. I also did Patriot One in 2014, which was a
Big success.
concealed weapons deal when the shootings were rampant in the U.S. I brought in Tom Ridge as an advisor on that deal. Tom Ridge was the first Secretary of Homeland Security. So we have the ability to put deals together. When everybody was out trying to grow marijuana, we put together a deal for a breathalyzer for marijuana impaired drivers. And again, we had a 500 million market cap on that deal. And that deal's still alive. We'll have a working device certified this year. The Patriot One technology's been listed to the main board on the TSX. It's trading as Extract One, and it's about a 300 million market cap. And again, we've done other mining deals and we've had success and we've been fortunate to work with some very high level brokers and institutional investors that have been party with us.
Cal, that track record says it all, man. I mean, look, we can all get lucky once. All of us can get lucky once, but you've got an extensive track record of building great companies, great exits, great valuation. So I think that's important because a guy like you don't just throw spaghetti at the wall and see what sticks. You're very methodical about what you do. So congratulations on how far you brought LaFleur to this point. Can't wait to have you back because it sounds like there's going to be a ton of activity, and I think investors who are watching this and listening to this will have a lot of reason to watch the company and hopefully participate in your success. Last word to you, Cal, before we sign off.
George, I think we talked about, my vision for the company to be a gold producer for 150 to 200,000 ounces. It's good for us to have a vision, but I think, to have that likelihood of success, you need to be at the right place at the right time with the right asset. And I think we hit all 3 points on that. We've got a permanent mill that's upgraded. We're in the heart of the Abitibi gold belt, and we're in a gold market that's probably the best that's ever in any generation. So
Ever $4,000.
yeah, so I think we're at the right place, right time, right people, and the right market, and we will develop a gold producer in Val-d'Or.
Thanks, Cal. Thanks for being here. We know how busy you are, obviously by your track record and everything you're doing, but the fact you took out the time to talk to your shareholders, and prospective new investors has been awesome. Can't wait to have you back. And for everyone home, thanks for joining us. Put LaFleur on your watch list. Watch for more interviews like this. And thanks for joining us. See you next time.
Thank you, George.
Hey, small cap fam. I hope you loved this interview because more than a dozen people were involved in its production for the sole purpose of making you happy. If so, can you take a moment to support both our awesome guest company and Agoracom? Your engagement means the world to us. First, if you enjoyed this video, give us a thumbs up by tapping that like button. It's a small gesture that helps this interview reach even more potential investors to discover today's guest. Second, we would love to hear your feedback on this interview, so please leave a comment below. Be sure to keep it clean, but feel free to poke fun at George. If you loved what you heard on today's video and want to dig into our guest company right away, take a look at the links in the description below. And while you're at it, hit that subscribe button and ring the notification bell to never miss another great Agoracom small cap video. Thank you so much. We couldn't do any of this without you. Make sure to come back soon.